I'll do this, but wait, blah, 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 blah. Jay Powell was very direct. All right, Creedy, so come on in on the market reaction, because it was a little confusing, I think, like right after. Right now, it's very clear. Investors got the message.
Investors got the message, but I think there's two ways to interpret this, and Mike McKee is going to scoff at me all the way from Wyoming when I say this. Well, look, the S&P 500 is down about 2.5%, and he, to Mike's point, that this is the discount rate that they are starting to say, well, okay, the things are going to get more expensive, borrowing is going to get more expensive, and spending is going to get more expensive as well. So they're on the front, on the surface level, there's that immediate reaction that a lot of people were expecting. If you're more hawkish, stocks are going to fall. But then there's the other argument to be made here that if, in fact, the market believes that the Fed is actually able to tackle inflation, is going to stick to that message, which it does feel like they've communicated that quite clearly after his speech today, then that in theory, and I say in theory with a highlight and a massive underline, should tend, in theory, push back this recession that everyone seems to be forecasting further and further out. And then from a growth perspective, that should actually create a bull case for the stock market. So to see that the stock market is actually falling, by the way, on this summer Friday on higher volume, and by the way, it was gaining all week long in the lead up to this, is interesting. And so there is a narrative out here that, yes, the market is dropping today on these hawkish comments. Will it continue to drop in the next few weeks, or in fact, will you start to see more and more people trickle in as they really take the Fed's message to heart?
Yeah, one of the questions that we've been discussing throughout the day with some equity fund managers is, will we retest the lows back in late June? And some of the folks that I spoke to earlier today on Bloomberg Markets was they didn't think so. You know, certainly some weakness today related to the Fed and maybe kind of a repricing down here. Maybe we trade down here a little bit, but we'll have to see how, as more data points come in, quite frankly.
Yeah, and I think it's also something to put into some perspective here is that, yes, it looks like we have had a recent rally in the last couple of months, and specifically in July, that summer rally that you will see. But look, the S&P 500 is still down 14% year to date.
Right.
So there is still a lot more headwind to make, or tailwind, headwind, whatever, a lot more to do here for the stock market to really recover. So I think it's perhaps early to say that the stock market is completely recovered or the bulls are in control, but by any measure, because they're not.
And I think there's some nervousness, I think it's safe to say, because Jay Powell came out and said, listen, we're on an inflation fight right here, and if that means there's obviously going to be some economic pain for businesses and individuals, we get that. So I wonder if some of that is obviously reflected in the markets as well.
It's all going to be reflected in the markets. That's why the payroll story is so important, because it's if you get a recession, is it a jobless recession? Is it a traditional one, or is it a job-full one, which once again makes it even harder to trade?
I agree. We have not. That would be uncharted territory, certainly for the world.
If you went down to the beach today, would you see a lot of people with their iPhones and iPads and the Bloomberg app opened up and furiously trying to trade here around this news? I mean, you know.
I asked our producers, when we can't do the meeting at our usual show meeting at 10. I'm like, I've got to be listening to Jay Powell. I want to get the tone. I want to get the feel, right? Creedy, thank you so much. Really appreciate it. Bloomberg Markets correspondent Creedy Gupta here in our Interactive Brokers studio. Michael McKee, international economics and policy correspondent at Bloomberg News. Catch him. He's got more interviews to come from Jackson Hole.
He does. All right, let's head down to Washington, D.C. right now. Get world and national news with Nancy Lyon. Nancy.
Thanks, Paul. The FBI affidavit used to get a search warrant on former President Trump's Florida home is now public, with large sections blacked out. Of the 32 non-exhibit pages of the affidavit, 24 included either complete, full redactions of paragraphs or partial ones. Bloomberg Washington correspondent Joe Matthew reads from the document's conclusion that was written by an unnamed FBI agent.
Based on the foregoing facts and circumstances, many of them redacted, I submit that probable cause exists to believe that evidence, contraband, fruits of crime, and other items illegally possessed will be found on the premises.
Again, Bloomberg's Joe Matthew reading from the affidavit. Moderna says it is suing rival Pfizer and BioNTech, claiming the technology in their COVID-19 shot infringes on its patents.
Moderna says the pair copied its mRNA technology without permission, and the company is not asking the courts to pull the Pfizer vaccine from the market, nor is it asking to block future sales. Moderna is seeking damages. Early in the pandemic, Moderna said it would not enforce its intellectual property, but they modified that pledge to apply only to lower-income countries. The lawsuit sets the stage for a massive legal clash between the three vaccine giants. In Washington, I'm Amy Morris, Bloomberg Radio.
Two forever chemicals would be designated hazardous substances under a rule the EPA is proposing today. The action moves industries and federal facilities a step closer to strict liability to pay for their current or past release of the two compounds. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Carol Masser, Paul Sweeney in for Tim Stanovic on this Friday. And listen really closely to Nancy Lyons, who's doing World and National News, talking about this Moderna lawsuit against Pfizer and BioNTech. I mean, Moderna's shares are down in an overall down market today. I'm assuming Pfizer is too, but man, this doesn't seem in the spirit.
Yes, it's exactly. When I first read this story, I mean, we got Moderna is suing Pfizer and BioNTech, claiming that the technology in a COVID-19 shot infringes on its patents, a move that sets the stage for a massive legal clash between the vaccine sites. And when I first read this, I was like, guys, we were in such a good place. You had done such a great job bringing these vaccines to market.
Right.
People were actually patting Big Pharma on the back, saying good job, as opposed to complaining about high, drug prices that we typically do.
Right.
But I guess there's big money involved here, I guess. But it's almost like you said earlier, haven't you guys made enough off of this?
And I thought there was such wonderful collegial collaboration between, kind of the government and private sector and just everybody moving forward to get this vaccine out. And I got to go back and look, because didn't Moderna benefit initially from some government research when it came to messenger RNA? Forgive me.
Yeah,
I just want to look back on some of this.
But it's interesting. I mean, it's, what made this all possible is this mRNA technology.
Correct.
That was kind of the new thing. And, people in the industry had been working on mRNA for a long time. That's why when this, virus came along, they were essentially in the ninth inning of development here, and thank goodness they were, because they were able to repurpose it for the vaccines.
Well, and what I will say is Pfizer and BioNTech coming out, I guess, saying took 4 different candidates into clinical testing, including options that would have steered clear of Moderna's innovative path by using unmodified messenger RNA, according to that lawsuit filed Friday in the district court. That's what Moderna's saying. So it's, I don't know.
Yeah, you'd like to think in hindsight, couldn't you just work this out yourselves, guys? I mean, again, you had such great, kind of wind at your sails kind of thing.
Yeah, exactly. Anyway, there will be more to come, no doubt, on this one.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is trading at session lows after Fed Chair Jay Powell suggested the Fed is likely to keep raising interest rates and leave them elevated for a while as it fights inflation. He also, importantly, pushed back against any idea that the Fed would soon reverse course. Dow Industrial Average weaker by 2.3%. The S&P now weaker by nearly 2.7%, and the NASDAQ Composite off by 3.2%. We're seeing a stronger dollar with the Bloomberg Dollar Spot Index rising 0.4%. Yields moving up, particularly at the short end of the curve. Two-year Treasury now yielding 3.39%, a 10-year at 3.03%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Kickoff to the close. Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
And a very good afternoon, everybody. Welcome to the Kickoff to the Close. I'm Carol Master, along with Paul Sweeney, in for my co-host Tim Stenovic on this Friday. We're joined now by our TV colleagues, Caroline Hyde, Taylor Riggs, and Katie Greifeld, as we walk our audiences on radio, TV, and YouTube towards that closing bell. And I got to say, he came, he saw, he conquered. At least he conquered the conversation around pivoting. We're talking about the head of the U.S. Federal Reserve, Jay Powell, in a very short 8 minutes, really confirming for investors that the Fed will continue to raise rates and probably keep them high for some time, even at some economic pain caused to businesses and individuals. All right, so what does that mean for the markets? We've got pretty clear direction. We've got a sell-off when it comes to equities at this hour, clear across the board on elevated volume. So we're down more than 2.6% on the S&P 500, 2.3% lower on the Dow Jones Industrial Average. Tech stocks once again feeling the most pain, down 3.25% overall, and small caps not escaping this as well. The Russell 2000 we are seeing right now, Taylor, down about 2.7%. So now I'm wondering, now that Jay Powell is done, what do we count down to?
I can tell you one thing we're counting down to: more inflation data, more jobs day. And in the next few minutes, as we count you down to the close, I'm going to start by some of the economic data, as I usually do. And it's core PCE, it's the PCE deflator, all of sort of these big numbers that we got actually rolling over a little bit. Katie, I think year over year, we're finally back down to 6.3%. Last month was 6.8, and the estimate was 6.4. So at least on those measures, peak inflation looks like it's really starting to come down. In the last 3 months as well, core prices have risen at about 4.3%. That actually might show some improvement to some of this inflation story.
And it makes you wonder, on a normal day, on a non-Jackson Hole day, theoretically, you could see that being taken as good news in the markets. But Paul obviously did not even make a dent today.
No, big move to the downside. Well, I got an interesting story. Sometimes, those Wall Street analysts, they actually do earn their keep. On Wednesday, a certain analyst, Charles Brennan, he's a London-based technology analyst for Jefferies and Company. He put out a research report and he listed some takeover candidates in the tech space that he covers. One of those names is Micro Focus International. Well, guess what happened? The very next day, Canada's Open Text said it would buy Micro Focus for a 99% premium. So not a bad day's work. A nice trade there for those who made it.
I like that you, formerly the sell side,
Right.
humbly come out and say sometimes the sell side creates its worth. Paul, you always create your worth, especially my favorite world of sell side, Caroline.
You have your favorites, whether it's sell side, whether it's the bond markets. Taylor, you really like how we're framing this conversation in the moment, because we go micro, we go macro. Let's take it back to the macro again, because where Carol started our conversation was a focus about the Federal Reserve, about Jay Powell, about rates going higher on the short end, but they didn't actually kickstart the conversation, perhaps. This was actually the European torch that was lit. The baton was passed. The ECB, many starting to think that 75 basis points could be where we go for the ECB on their next meeting. We're now really starting to see the bond market sell off due to that. The German 2-year really spiking. We got back above, well, almost close to a percentage point, Paul.
Yeah, absolutely. It's kind of the ECB kind of snuck up on me a little bit today. All the focus was on Jackson Hole and the Fed, and then the ECB said they still have some arrows left in their quiver as well. So it looks to be a little bit consistency, if nothing else.
Yeah, pressure on global investors. I think it's really important, Caroline, that you brought that out. Even Jay Powell talked about inflation. It's a global problem, and it's going to take many actors, if you will, to really rein it in ultimately. All right, the man of the hour, the man of the day, the man of the year, the man of the week, whatever you want to call it. Fed Chief Jay Powell, of course, speaking earlier from Jackson Hole, the economic symposium, just 8 minutes, as we talked about, a little bit over 8 minutes. He did say higher rates are coming, and they're staying with us. No pivot, everyone, at least not yet. Check it out.
Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
And of course, that is Jay Powell, the head of the U.S. Federal Reserve, earlier from Jackson Hole. Caroline, that pain has certainly also got to be worrying investors that, what kind of economic slowdown will result from all of these interest rate hikes.
Yeah, meanwhile, looking at the interest rate hikes, I just want to go back to the ECB, some breaking news that indeed the ECB's Holzman is saying that the 75 basis points should be part of the debate in September. And Katie, some ECB officials want quantitative tightening talks in 2022. So really is this now focus on where next for global central banks?
A real sign of the time that they're even thinking about talking about it, of course, as the Fed's own quantitative tightening set to kick into its highest gear. But I want to talk about the yield curve, obviously, out of the comments from Powell today. It's a little bit of a flattening, but still, this seems to be the trend to watch. We just heard from Kevin Nicholson, for example, who said, listen, the front end, it's rising. That's the reaction function, at least in the markets. The long end is anchored. That is a recipe for further inversion.
I love the comments that Kevin Nicholson also said about QT, that the Fed hasn't even started to deliver on its promises. We've really only sort of done a little bit of QT, nowhere near the big promises. So if September 1st is supposed to be $95 billion a month, we'll see. We haven't gotten there yet.
It'll be interesting to see how we play this out when people get back from Labor Day. Will some of the people come back that said, you know what, yeah, I heard what Fed Chairman Powell said, but it's not that bad out there. There is a chance that they're just going to pause and we can start buying some risk assets.
All right, guys, we're going to be back with the countdown to the close in less than 30 minutes. And of course, we're going to be counting you down to the close on this Friday, wrapping up the week with Beyond the Bell at 4 p.m. Wall Street time.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And you are listening and watching Bloomberg Business Week on this Friday. Carol Massar, along with Paul Sweeney, he is in for Tim Stenovic on this Friday. I mean, I don't know. What are you now counting down when it comes to the markets? Is it the next Fed meeting?
I think we're going to get some data points between now and the Fed meeting, and we'll see whether they show maybe some continued moderation in inflation or not, because that's certainly what the Fed is focused on.
Yeah, I feel like a very clear message from Jay Powell. He made a point of making it short, brief, and to the point. All right, you are listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Paul, so I think about, we've been complaining certainly this year about high gas prices in the United States, high utility bills. We've talked about the stories of people not being able to pay it. Go over to Europe, and it's like that on steroids.
On steroids, and it's going to be a really tough winter for our friends in Europe, I think.
All right, we're going to talk about it in just a moment. First up, though, back to the markets and your top business stories. Here's once again Doug Prisner.
Yeah, tough day today if you're long the U.S. equity market. Dow Industrial Average right now is lower by more than 2.2%. We had comments today from Fed Chair Jay Powell, as expected, very hawkish tone. He suggested the Fed is likely to keep raising rates and leave them there at an elevated level for some time as the Fed continues to fight inflation. He also pushed back against any notion that the Fed would soon reverse course. And he said, on top of that, an unusually large increase in the Fed funds rate could be appropriate next month, although he stopped short of committing to one. S&P 500 right now weaker by 2.6%. We're seeing a big drop in information technology shares, the entire group down 3.4%. And then if you look at the NASDAQ composite, we are off by nearly 3.2% right now. Yields moving higher, particularly at the short end of the curve, 339 on the 2-year with a gain of more than 2 basis points. But we had been much more elevated earlier in the day. The beneficiary of the move up in rates, the dollar, with the Bloomberg Dollar Spot Index now rising by 0.4%. I'm Doug Prisner. That's your Bloomberg Business Flash.
All right, Doug, got it. Listen, there are so many headlines on the Bloomberg. Europeans taking colder showers. You've got offices turning down thermostats. The cost of UK's winter tripling as energy prices cap leap. French electricity prices surges past 1,000 euros for the first time. And then you've got Bloomberg Opinions, Javier Blas writing about how he's listening to electricity traders on conference calls, Paul, and what he's hearing is getting scarier and scarier by the week. This is what made me said, we got to do some stuff here.
We got to do some stuff here on the energy space. Fernando Valle, he's a senior oil and gas analyst for Bloomberg Intelligence. He joins us live, yes, I say live, in our Bloomberg Interactive Broker Studio on a summer Friday. That's a double gold star day. So, Fernando, just put into, when you talk to these big energy companies, and what are they saying about the current energy situation, supply, demand, and where it could go over the next critical 6 to 9 months?
Well, I think in the next 4 months, as you alluded to, the winter months, they are in dire worries. And, we talk a lot about Europe. The U.S. also has some issues in the Northeast, or especially New England, because we also rely on natural gas and diesel. And a lot of it imported from Europe, including Russia. And so when they look at the supply, there's dueling talks, and on the crude side, OPEC Plus is saying we're oversupplied. We might even cut back on production. Right. We're not quite seeing that, but on the refined product side, we're really seeing a shortfall. And because of the issues around power, we may see an even bigger issue on the diesel front.
I mean, so give us some perspective. How bad is it? I was trying to think, is this like during, go back to
early 70s,
World War II, or the early 70s of gas lines, World War II, and or blackouts, like during a wartime effort? Like, how do you put it into perspective?
Well, there are parts of Eastern Europe that are already having rolling blackouts. So if you go to Kosovo and Albania, they're already seeing some rolling blackouts. And yes, I think in Europe you could see it, depending on, again, it's hard to predict winter weather, but if we have inclement weather, the truth is Europe imports about 2.2 million barrels a day of oil equivalent in natural gas from Russia. We, as a country, export on a net basis less than 1 million barrels.
The U.S.
The U.S. And we're one of the largest exporters of diesel. So if we try to make that up, we're less than half, and that we're taking away supply from somebody else. And there are other avenues like fuel oil, but the truth is we haven't really invested in coal. So even if we want to turn back coal power plants, we don't have the thermal coal supply needed to burn. We don't have the natural gas storage for a prolonged period, maybe a couple weeks. And then energy storage on electricity front, it's less than 2 hours in all of Europe. So if you lose power, those batteries, if they run 100%, they'll give you 2 hours.
2 hours. All right, you've been covering as an analyst, the energy business for decades. So I'm going to throw you in with all of them. You're part of it now. Why don't I just go down to Texas or Oklahoma, get some rigs, get some wildcatters, and just start pumping out more oil, more nat gas, and then maybe liquefying it and sending it over to Europe.
Well, one, you need to get some cranes and get some workers, if you can find them, they'll love it, to build some LNG export facilities. And then here's a great issue. We need to go down to D.C. and tell them we need to build some pipelines from West Texas to Louisiana, because that's where our available port capacity is to do that. But we don't really want to. And then while you're in D.C., you can tell them to repeal the Jones Act, because we can't export diesel from Texas to Boston because of the Jones Act. We don't have the tankers, Jones Act tankers, to bring it there.
What is the Jones Act?
The Jones Act basically says that anything shipped between U.S. ports has to be in a vessel built in the U.S., manned by U.S. citizens, and flagged in the U.S. There are very few of those, so it makes it very expensive, which is why we import gasoline and diesel from Europe as opposed to the Gulf Coast.
So where are
All right,
we?
so it's not easy for me, is what you're saying. I can't just go down to Texas this weekend. Okay.
Well, I do wonder what the fix is. I mean, if producers too are not looking to ramp up, if there's regulations that make it difficult for us to do it, we've also got this rethink and move towards alt energy. So then are we in kind of this state for a while longer? And by a while, maybe it's a few years?
Yeah, if not more, I think needs to be a rethinking of energy policy. The closing of nuclear plants seems to be a little bit too fast. Prolong those lives. I think we need to really reassess into a basket approach to energy. I think we're not ready to give it to any single part of the energy matrix, and we need to accept that we're going to need to ease some regulations to get more permitting for not just oil and gas, but renewables and other forms of power.
How did we get here? Is it the Russia-Ukraine thing was the domino that tipped it and just kind of started it all?
No, definitely not started. I think started with too optimistic a view on where we were going to get. Okay. And, as anything, low prices gave us unreal comfort in our energy, ability to supply the world with cheap energy. And now that that's gone, we face the reality that we don't have enough energy supply, especially with bad actors in the...
I'm with you, Paul, because it's like I was up in the Bakkens in 2010 and we were awash. Everybody was drilling and fracking, and we talked about it, and we talked about U.S. energy, independence, and here we are in such a problem. Just got about 30 seconds.
Yeah, we are relatively energy independent once you consider Mexico and Canada. It's just we can't move that energy around. And we also need to support our partners in Europe, who are not energy independent.
I tell you, I'm not sure how we get out of this.
I'm not either.
So we're going to keep talking to people like Fernando because we're going to see. Yeah. I think we're going to see some innovation. But it's going to be painful maybe in the interim.
I think so too. I think the pain is going to cause that innovation, right, and disruption. All right, we got to run. Thank you so much, Bloomberg Intelligence senior oil and gas analyst Fernando Valle, joining us in our Bloomberg Interactive Broker studio. This is what we were hoping to bring to our audience. So thank you, thank you, thank you.
And thank you for being in studio again. Double stars. Right now, let's head down to Washington D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. New details are coming to light with the release of a heavily redacted affidavit that was used to justify the FBI's search of Mar-a-Lago. Loyola law professor Jessica Levinson tells Bloomberg much of the document is blacked out.
The front half of the affidavit, where we have more information about the statutes and we have more information about the negotiations between the National Archives and the Department of Justice and former President Trump and his attorneys, that's all open. But then everything else leading into really the maybe more juicy, quote unquote, parts about probable cause and why it existed, that is all blacked out. And I would say for good reason.
Loyola law professor Jessica Levinson spoke with David Weston on Bloomberg's Balance of Power. The Justice Department found 184 classified documents in 14 of 15 return boxes. Moderna is suing Pfizer and BioNTech over alleged patent infringement. Specifically, the lawsuit involves the two companies making their COVID vaccine by using Moderna's technology. Pfizer and its German partner are accused of copying it after Moderna filed patents for its mRNA technology between 2010 and 2016. President Biden's approval rating is heading higher, now 44% in the latest Gallup poll. That's up 6 points from July, and it's the highest it's been in a year. Well, the president today is marking 1 year since a terrorist attack killed 13 American troops in Afghanistan. It happened at the Kabul airport as the American withdrawal was ongoing. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Okay, where do you want to go? I know if Matt Miller was here, we'd go Porsche IPO. But
the funny thing about the Porsche deal, okay, it looks like the IPO is going to go forward.
Okay.
Okay, but as an analyst, what just amazes me here, now, Porsche is owned by Volkswagen.
Right.
And Volkswagen owns lots of different brands.
It's massive.
Just massive. The value of Porsche, they're talking about $85 billion. That's basically the market value of Volkswagen. So everything else at Volkswagen you get for free. So this is just an example of the parent company saying, this sum of the parts thing is not working for me.
Yeah.
My stock is undervalued. I need to take one of my prized assets, put it out there in the marketplace, and let the market value it, and then that will highlight the undervalue on the rest of my company.
So it makes sense.
Yes.
Totally makes sense. Okay. All right. So apparently Porsche 2, just in terms of our story, lining up for its IPO at a valuation of, as Paul said, $85 billion. So it would be one of Europe's biggest ever listings. Yeah, it's pretty amazing. And they are listing, I guess they got T. Rowe Price interested in subscribing, and we're looking at September IPO.
But the problem with doing this type of story with Matt Miller is it goes right to the cars, and we start talking about aspirated engines and, displacement. There's no replacement for displacement. And he just goes completely off the rails, torque off the rails. So I'm glad we could at least get to a couple of numbers here.
All right. All I know is my husband has an old Porsche that just costs a lot of money to take care of.
Oh, it's
like a kitchen. It's like, you name it.
Right.
In the meantime, another story by our Skylar Woodhouse. We just got to get to it. Those of us who are in New York Metro, talking about Manhattan congestion pricing plan hitting a little bit of a nerve as hearings open. How do you think about this?
I think it's a good thing.
I do too.
I'm a big fan of mass transportation. They have this in London to a certain degree. And pre-pandemic, traffic in the city was really, really, really difficult. And it did show no signs of getting better. Now, we'll see what life is like post-pandemic. But a lot of folks who do drive, obviously it's another toll, another tax.
This plan calls for charging some motorists as much as $23 in tolls. But, hey, they're figuring it out. I'm with you, Paul. I feel like there's just too many cars on Manhattan streets. All right, you are listening, watching Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market sharply lower today after Chair Jay Powell delivered a very hawkish speech at the Jackson Hole Symposium. He suggested the Fed is likely to keep raising rates and leave them elevated for a while as a way of fighting inflation. Importantly, he also pushed back on this idea that the Fed would soon reverse course. You know, the Fed pivot that we've been talking about. And another thing he said was that an unusually large increase in the Fed funds rate could be appropriate at next month's meeting. He did stop short, though, of committing to one. We're seeing the equity market trade right around session lows. NASDAQ comp down nearly 3.3%. Information technology leading a slump in the S&P 500. The index down about 2.7% right now. For the Dow Industrial Average, a loss of about 2.3%. Now, in terms of the economic news, the Fed's preferred measure of inflation. This is the PCE deflator. It was down in July by 0.1% compared to June. That is the first negative print since the beginning of the pandemic. Consumer spending in the States posted a sluggish increase in July, and separately, consumer sentiment from the University of Michigan, it was up more than expected in August, as inflation expectations seem to ease a bit for the year ahead. 10-year Treasury, 3.02%. Not much change. Shorter end of the curve, we have the 2-year at 3.38, a gain in yield terms by a little more than a full basis point. I'm Doug Krisner. That's your Bloomberg Business Flash.
It is indeed. All right, Doug, thank you so much. Well, Bloomberg Business Week, the new issue now out on newsstands, online at Bloomberg.com/businessweek, and of course on the Bloomberg terminal. And in it, how Wrigley Field, home to the Chicago Cubs, holy ground for baseball fans, is also now the ground of DraftKings, which is coming for your dumb money. So says the headline on our story. So let's get into it with Bloomberg Business Week editor Joel Weber. He's on the Access line in Massachusetts, along with Bloomberg News Projects and Investigations reporter Peter Robeson. He is on the phone from Washington State. We were all talking about this story in the newsroom, Joel.
Do we have Joel?
Do we have Joel?
We'd love to have Joel.
We're going to try and make sure we've got Joel. In the meantime, Peter Robeson, are you there?
About it.
Okay, Peter, it's an incredible story, and truly, we were all talking about what's going on between DraftKings and over at Wrigley Field. So, tell us about your story and what you set out to find out.
Thanks. It's a story about the sports book that's opening at this incredibly iconic stadium, Wrigley Field in Chicago. A sports book is this Las Vegas style place where you can bet on sports and gamble, which are now allowed in many states around the country. And it's an interesting subject because these betting apps are still fairly new, to many people, and they may not understand about what they're getting into. So our story tried to look at what the odds are as you bet, how companies use data to understand their customer bases, and subjects like that.
I do feel like Joel Weber, we've got him, of course, the editor of Bloomberg Business Week magazine on the Access line from Massachusetts. Sports, they're changing, and a lot of it has to do with gaming and gambling here, Joel.
And baseball is a particularly interesting sport to choose. And, this has just been a really interesting area of coverage that Peter's been all over so far this year. But Peter, why baseball? Why Wrigley Field, and is this not desecration of a hallowed ground?
It's an interesting question. There are people who have opinions about how the Cubs have been managed under the Ricketts family, which has taken a more sort of dollars and cents approach to this franchise. Which games at Wrigley always had this kind of lo-fi feel. You had Harry Carey singing "Take Me Out to the Ball Game" in the seventh inning, and the bleacher bums. And, next year when you go to a game, you'll see this very fancy glass-walled bar at the corner of Addison and Sheffield. And while you can't pass between the stadium and the sports book, which, may show some of the ambivalence that the league still has about gambling, it will be, promoted to you as you go to a game. And the hope is that, especially in these days when the Cubs are well out of the wild card race, that you spend some time thinking about whether Ian Happ will get 2 hits in that game and put some money on it.
Yeah, Peter, I mean, I'm no stranger to a Vegas sports book, but to have it right at the stadium is really a unique idea. Talk to us about the Ricketts family here. I mean, they've done a lot of new and progressive things since they took ownership from Tribune.
They have. They've made some needed updates. The bleachers were falling apart. There weren't even video boards in the stadium until the last several years. So they've put in video boards, and they've also made some improvements around the stadium. There's a boutique hotel now. There's team offices and a conference center. There's a retail store, and it's definitely made the experience nicer for fans. You do talk to some fans who say it feels more like Cubs Disneyland now, that the sort of monetization is a little bit in your face, and there's nothing more monetizing than these betting apps, which are really trying to monetize things down to pitch by pitch. You can even bet on whether the next pitch will be a ball or a strike.
Okay, so let's talk more about that, because if you're into sports betting, you know all about this already, but maybe for the uninitiated, how is it advanced, and what is DraftKings' specialty?
Well, the thing that really surprised me in reporting this story is that DraftKings publicly, at least to investors, shows a lot of confidence in its ability to control its and manage its user base. Jason Robbins, the CEO, talks about sharp management. He talks about the ability the company has, to limit bets from professionals that it expects to win. And in some cases, that's because these may be international syndicates or algorithmic bettors that are betting millions of dollars on a game. But we've heard about complaints even from smaller dollar bettors who say they aren't able to get their bets in once the app sort of targets that bettor as a sharp bettor. And that's a key advantage that these apps have right now, and it's one that they even highlight in their securities filings, that this discretion they have over individual customer accounts is something that we cannot assure you investors that will be there forever. And so there's some skepticism that some people have about whether the playing field is truly level if you're just an average recreational user.
Well, Peter, I'm not throwing you some shade, but I'm assuming you're not a professional gambler or bettor. But you did try out the app. What was your experience with it, and maybe what insight did it give to you about maybe the average Joe or Jane playing around with this app?
Yeah, I would put myself in that category as a first-time user of this app. If you listen to these ads that are kind of ubiquitous during sporting events, you get the idea that free money is there for the taking. And I signed up at a time when the DraftKings was offering a 20% bonus on deposits up to $1,000. So I put in $200 and I bet on a parlay with a combination of events that would have to happen for the bet to pay out. And I quickly lost my money on that first bet. But the interesting thing was that the deposit did not come back in the way I expected. I had thought from a quick glance at this promotion that I would get $40 back if I lost this $200. Instead, in the fine print, it says you get $1 back for every $25 wagered, and you get it in playable credits. So I ended up with $8 in playable credits instead.
All right, hot dog with that?
And at this point, I'm back home. This is in Illinois where I could bet on, but now I'm back home in Washington State, where if I want to play around with that further, I have to go into a casino.
All right, we got to leave it there, guys. Thank you so much. Have a great weekend. It is a great story. Peter Robeson, Projects and Investigations reporter at Bloomberg News, on the phone from Washington State. Joel Weber, the editor of Bloomberg Business Week on the Access Line in Massachusetts. The story in the new issue of Bloomberg Business Week. Paul, it's out? Newsstands, online?
It's interesting. Just 5 years ago, professional sports wouldn't have had anything to do with gambling. Now they're all over.
Remember, they wouldn't even touch it, right? For fear of being tainted. All right, coming up, we're checking on the markets.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session, your trading week. Caroline Hyde, Taylor Riggs, Katie Greifeld, joined now by our colleagues Carol Massa, Paul Sweeney, in for Tim Stenovic. And we go cross-audience, as we always do, TV, radio, YouTube, to look at a day where volumes are still relatively muted, Carol, but overall this is a downward trajectory following Chair Powell.
Yeah, we continue to see some selling as we get closer to that closing bell. We've also talked about some elevated volumes in this selling outperformance. I know I've talked about it a lot this week, but we're still seeing some outperformance in those Chinese names that trade here in the United States. That group overall is up about 10% for the week overall, certainly beating those U.S. exchanges. The latest news, Paul, we got some news that the U.S. and China officials have reached a preliminary deal in a push to avoid delistings. We're talking about 200 companies on New York exchanges. So again, some enthusiasm for those Chinese names.
Yeah, and you think about that, you think about Alibaba, some of the big IPOs that came over the last couple of years were big names for a lot of investors over here. And looking at today's trading, NASDAQ, where a lot of those tech names reside, it's off 3.3% more than the S&P.
Yeah, and let's get to those benchmarks, because as you say, it's lower. In fact, actually, volumes are much lower on the NASDAQ as well. We're off by about 13% versus your average. But you're right, Paul, we're also off in a percentage point terms, worse in terms of the actual fall of the benchmark, down by 3.3%. That's 412 points lower for the NASDAQ. Big tech feels the pain as we start to question a more hawkish Federal Reserve. Russell 2000 also off by 2.8%, so small caps get a hit. But the S&P more broadly is off by 2.8%, 117 points that it loses, and the Dow is relatively outperforming. But look, it's off by 2.5, Taylor.
And I know that we talk about low volume, but it still feels actually pretty broad-based in terms of the magnitude or the breadth or the depth of the selling when you see sort of all the sectors within the S&P 500 that are lower on the day. And there are about 1, 2, 3, 4, 5 sectors within that, let's call it half, where there's not even one stock within that that's high on the day. So, Katie, you're really seeing some significant selling.
Big time. I did find some stocks that were moving a little bit higher. We got to start with EA, Electronic Arts. This is an interesting story. So it absolutely surged after a report from a gaming and esports website that Amazon was looking to buy the company. That report has since been retracted, but you can see shares still higher to the tune of about 4.4%. You also have NVIDIA. We were just talking about how the chip sector is faring not well. A lot of that is thanks to NVIDIA. At least for today, it delivered a weak revenue forecast for the current quarter, just dragging shares lower. And then this is an interesting story. I'm going to go to California, Taylor Riggs' home turf. So California, it intends to award 3 Medi-Cal contracts to Molina, being one of them. Centene, though, didn't make the cut. You can see shares lower are lower by more than 6%.
Not winning the contracts, it's feeling the pain. Meanwhile, we're also repricing. We're pricing in the market more broadly a more hawkish Federal Reserve. Great chart. We use it time and time again because it shows you really the probabilities now being built into the market that we'll see certain extent of hikes. Well, for the 75 basis points hike in September, the market now basically almost a majority feel that we're there, about 50%. So we are having a repricing following a more hawkish Fed Chair Powell, Carol.
Wait. We're going to continue raising rates? Did we find out? Okay, of course, we did hear from Jay Powell. Sorry, guys. But we've been counting down to it. We got it from Jay Powell this morning from Jackson Hole, reminding us and actually drawing on history to remind us about the mistakes that central bankers can make if they start to stop raising rates to rein in inflation too soon. Here's what he had to say.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy.
All right, of course, that was Jay Powell, chairman of the U.S. Central Bank earlier at Jackson Hole. I mean, again, I think that brief message, so succinct, like we all got the memo, everybody, right?
Yeah. I mean, certainly everyone got the memo, whether it be, though the bond market already had that memo.
Good point.
The stock market perhaps didn't.
And that's what's confusing to me. I have a very engaged audience desperately writing into our IBs, Katie, and they're saying that they finally realized that pivot never happened. And I think maybe some of the analysts, maybe we had often talked about, was there a pivot? Those were some of the notes that we were reading. And then a lot of people had said they were never pivoting. We made that up. They were still going full steam ahead. And maybe the equity market today finally back on board with that narrative.
Yeah, the reaction, I mean, some of the commentary I read was that we didn't hear anything new today, but I feel like that was part of the point, that obviously Jerome Powell, he's sticking to his guns. He's going to continue on this path of aggressively raising rates. I think this was one of the first times we had heard from the man himself since that July CPI report, which, as was made clear again today, it's not time to take a victory lap.
Not, but we did actually see some improvement in the data. If you look at it, the PCE deflator, and generally showing that we are on that trajectory. We are seeing a cooling in prices. You might not get that read from some of the commodity prices today, but even being built into a better reading on the University of Michigan sentiment too, Paul.
Yeah, actually, I will give you all the Paul Sweeney Personal Inflation Index, otherwise known as the Daily National Average Gasoline Prices. This is according to AAA. We're down to $3.86 a gallon to fill up your car. That's down from that $5 peak we had back in June. So that's a real money in consumers' pockets. I'm sure the Federal Reserve is paying attention to that.
Paul, come on. In your Carmel, California, it's still $6 a
I know, but on the
gallon.
Jersey Shore tomorrow, I'll get it for $3.60 a gallon.
I don't know, Paul. When I drive out of the city, I haven't seen under 4 yet, but I don't know. Looking at the trend, I know it's coming. Haven't seen it yet, though.
All right. Well, the trend line is coming down, guys, if we believe the data that's out there. And we
Not for
probably
corn,
should.
not for wheat, not for food.
You know what's interesting? I think, Caroline, you mentioned the sentiment, that the sentiment numbers are there and that they were they were upbeat, right, in terms of the University of Michigan numbers. Jay Powell talked about sentiment and talking ourselves into being worried about future inflation prints and how that can lead to changes in behavior. And that was some pretty strong words. He had 8 minutes. He chose his words carefully, and I thought it was interesting, Taylor, that he stressed that as well.
8 minutes and 28 seconds.
All right.
Who's counting?
That's all you need.
Rounded it down.
It's like a nice, solid mile.
But much less than what he did. Mike McKee kind of comparing to what he did last time, much less than what he said last time.
Yeah, and I think it's interesting that we still, of course, continue to have an ECB that sounds more hawkish and really a global narrative that heads that direction. We just wanted to bring some breaking news just because there is some individual idiosyncratic news that on the day drags stocks lower, and notably 3M, of course, a big global company, big exposure to China, but of course, big long-term legacy exposure to certain claims. And they're saying, being told by a judge, being ruled that they cannot use bankruptcy to halt 230,000 lawsuits. Of course, this is all surrounding lawsuits to do with the army. So at the moment, some bad news that 3M cannot use the bankruptcy. They're losing that fight to block the jury trials in more than 230,000 lawsuits accusing it of harming U.S. soldiers, Carol.
Yeah, this has to do with combat air plugs. Remember, 3M is just a consortium of so many different companies. So we are definitely seeing that stock down about 7-8% here as we speak. All right, guys, we're going to be back in less than an hour's time on radio, TV, YouTube, our cross-platform coverage of the markets. We'll continue with Beyond the Bell. We're going to count you down to the close on this Friday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to and watching Bloomberg Business Week on YouTube. Carol Masser and Paul Sweeney, host of Bloomberg Surveillance and Bloomberg Markets on Bloomberg Radio. I'm tired.
Yeah, a lot going on. And tell you, this is a way to end the week here.
Yeah.
We weren't sure whether we were going to get any fireworks out of Jackson Hole. I would say the Fed delivered with a very clear message. The market is clearly getting the message. I will be interested to see when everybody comes back from the Hamptons, from the shore, from upstate, wherever they are taking some time off. Are they going to be buying again?
I don't know. Right, exactly. I mean, I would argue, forgive me, I'm not trying to be a bull out there, but if I look at where the market was 4 years ago, 5 years ago, right? I mean, the economy, generally speaking, the global economy will expand. We might go through some blips, but I would argue that you continue to see investors move into the markets. I would also argue that for a lot of individuals and Americans, there's no longer pensions and so on and so forth, and this is your retirement going forward.
Yeah, we were talking to Doug Cass from Seabreeze Partners earlier this week, and who's just a really successful, long-time portfolio manager, asset manager, and he moves in and out of this market, but he seems to be moving a little bit more on the bullish side. So we'll have to see how we get the sentiment when the pros really come back after Labor Day.
Yeah, right. And there's a lot more volume, right? Where's the conviction?
Yep.
Is there kind of churn in the market? Does the volatility continue? We've talked about the VIX coming down and a lot of complacency, it feels like, within the markets, but very clear. There are days where we can't kind of figure out direction. This is a very clear day where the risk trade is off.
So you'll have to see which sectors lead this market, who are the leaders. All right, right now, let's head down to Washington, D.C., where we get world and national news with Nancy Lyons.
Thanks.
Thanks, Paul. New information is emerging into what led up to the search of former President Trump's Mar-a-Lago home. The affidavit, in redacted form, has been released by the Justice Department. Loyola Law professor Jessica Levinson spoke with Bloomberg.
We see kind of the lead up to why we needed the search warrant, but not the specifics of the roadmap of where the criminal investigation is going from here. And that's exactly as expected.
Loyola Law professor Jessica Levinson. President Biden, when asked about it today, said it is up to the Justice Department to decide the next steps when it comes to the classified documents that were found at Mar-a-Lago. His recent victories in Congress are boosting President Biden's approval rating. Gallup's August survey shows a jump of 6 percentage points to 44%. Democrats are hoping it translates into momentum for candidates running this fall. Bloomberg Government's Emily Wilkins reports President Biden has already begun his midterm election tour.
He's casting the 2022 election as yet another battle for democracy. At a rally in Rockville, Maryland yesterday, he called Republicans semi-fascists and really kind of hit home the fact that it's calling a lot of the candidates extreme. He's also trying to tout a Democratic message of just a wide variety of things, preventing gun violence, allowing access to abortion, addressing climate change.
Bloomberg Government's Emily Wilkins says Republicans continue to hammer Democrats on rising inflation. On that front, Fed Chair Jay Powell said today the Fed is likely to keep raising interest rates and keep them high while trying to tamp down inflation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master along with Paul Sweeney. How are you on passwords? Are you good?
I'd like to think I'm good, but I'm probably not.
Do you let when they, say, do you want us to generate it for you? And it's like those crazy numbers. You don't.
No.
You never do it.
No, and I probably should because that is mega secure.
Right.
But this story you're going to highlight for us, the term that came to me is what the kids call meta. This is a password story about losing passwords. So LastPass, a password manager used by more than 33 million people around the world, said a hacker recently stole source code and proprietary information after breaking into its systems. Now, the company doesn't believe any passwords were actually taken, and users don't have to do anything, but still, it kind of gets your attention. You're a password security company. Yeah, you can't keep my password secure.
It's like you can't make this stuff up, right? I mean, this is what they do. They store hard-to-crack, auto-generated passwords for multiple accounts like Netflix or Gmail on behalf of its users. LastPass lists Patagonia, Yelp, and State Farm as customers on its website.
This kind of goes to the issue for me where my kids going into the workplace, cybersecurity just seems like a growth area forever. Because it just seems like it's going to be one of those games where the hackers get a little bit ahead, and then the cybersecurity folks catch up, and then they kind of go cat and mouse forever. It seems like I don't know.
I always think about Jamie Dimon years ago, like when he said, "What's the thing that keeps you up at night?" He's like cybersecurity, and I think about it with I live on my phone,
we all do,
right?
Yep.
We all do.
Even more so after the pandemic, I would argue. I'm doing more banking on my phone, for example.
I don't carry cash.
Yep.
And I just think about, my God, if this gets, was it Apple? Paul just showed me. Wait a minute. Paul just showed me some of that green stuff. The papers that actually has numbers on it. And we used to use it to transact.
I know. And you come into a store and you hand them a bill and you're like, oh no, I got to make change.
It's like, can't you just tap something?
Right.
But it's so true. And I think about this all the time. Like, oh my God, and it's just probably a matter of time, right? When some of these serious systems are brought down.
Yeah, it's interesting, and it's not just it's all kinds of companies, even technology companies like Microsoft, and those kinds of companies. So,
got a fiver over there?
Yeah, I got plenty. We have more. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market right now at session lows as we make our way to the closing bell on this, the final trading day of the week. Let's cross to the Bloomberg Macro Squawk Desk for the latest on the price action. Bill Maloney is there. Hey, Bill.
And good afternoon, Doug. A sell-off on Wall Street today after Powell's Jackson Hole speech. Dow is currently down 853 points. S&P's drop 120, and NASDAQ is down by 3.4%. The U.S. 10-year yield at 3.03%. Gold is down 21. Oil is in the green. And Bitcoin is trading lower by 4%. Among the main 11 S&P sectors, all are trading in the red, led by losses in tech, consumer discretionary, and telecom. And every stock in the Dow is also in the red, led by 8% losses in 3M. In other news, CNBC reported that Amazon is not expected to make a bid for Electronic Arts. And wrapping things up, Dell Technologies fell 12% after its earnings. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
Bill, thank you. And if you have a Bloomberg terminal in front of you, you can get live audio updates by using the function SQUA, then, of course, the green Go key. I'm Doug Krisner. That is your Bloomberg Business Flash.
Many thanks, Doug Krisner. Well, we do want to talk a bit more about the crypto world. You did hear Bill Maloney talking about Bitcoin down more than 4%. Ethereum is down about 8.5%, really a risk-off trade today. So with that in mind, let's get to our weekly crypto segment. Back with us is Grayscale Investment CEO Michael Sonnenschein. Grayscale, manager of the world's largest BTC fund. He is joining us, back with us on the phone in New York City. Hey, Michael, how are you?
I'm great. Thanks for having me. Good afternoon.
It's good to have you here. We are living in an interesting time. What's top of mind for you right now when it comes to where we are in the progression of the crypto world? I know you guys are continuing to pursue a lawsuit with the SEC about your own application and rejection for the Grayscale Bitcoin Trust to make it into an ETF. Tell us where we are in this world, especially as we continue to see volatility within the crypto asset world.
Well, I think it's really about patience from an investor perspective. You know, personally, I've been in the crypto space about 9 years, as has Grayscale, and we've seen drawdowns of greater than 50%, multiple times. And, each time we do see a pullback in prices, whether it's leverage coming out of the system, monetary policy, or other factors that are causing selling pressure in the crypto space, what I do find is each time this occurs, the crypto system ecosystem gets stronger, demonstrates its resiliency, continues to build, and I'm confident the same is going to happen with this recent pullback that we've been experiencing.
Hey, Michael, it's very rare for investors to, really participate, observe the creation and evolution of an asset class, and I kind of feel like that's what we're enjoying right now. My question, I got a million questions, but one of them is just kind of where are we? Like, what inning of this baseball game are we in the evolution of crypto?
I would argue we're still in the parking lot. We just got to the game.
You're right.
Yes, we're still tailgating, right? I think that, this is maybe the bottom of the first inning. And I think the reason that I feel so confident sharing that is because we've barely scratched the surface on the development of use cases for crypto assets. We are in the middle now of seeing how and why the crypto ecosystem is developing some fantastic applications, but we're still not yet at a place where the pipes and the plumbing is really connecting the crypto ecosystem to the legacy financial system. And as you see that play out, which I think you'll see over the next 18 months or so, you're going to see a lot more user adoption and a lot more use cases that folks will be able to bring into their everyday lives around crypto.
So if we're that early in on the game, Michael, don't you think the SEC is right in rejecting to change your Grayscale Bitcoin Trust to ETF or make it into an ETF, that application? If we're that early in the game, maybe they're right to kind of slow the roll when it comes to our move into crypto. And, their argument is that the market is not mature enough, doesn't have enough, market manipulation and fraud prevention measures to protect, consumers. Maybe they're right.
Carol, that argument maybe stood up a couple of years ago, but today, when we're talking about Bitcoin specifically, you're talking about a market that is as healthy as it's ever been. It's a two-sided market. It's highly sophisticated. It's global in nature. It's 24/7. We have the development of lending, borrowing. We have derivatives, and we now have multiple Bitcoin futures-based ETFs here in the U.S. And so I think the counter argument to what you're saying is that, really the SEC isn't actually protecting anybody by sitting on the sideline here, right? If we can give investors the ability to access Bitcoin through the familiarity, through the protections of the ETF wrapper, then aren't investors better off accessing Bitcoin under a product that is under regulatory supervision and scrutiny than perhaps accessing it directly? Because investors are still accessing Bitcoin every day. Investors are still trading in GBTC every day. And so we think it's a missed opportunity to not bring that product closer in to the regulatory perimeter.
Michael, I've been in these markets for 35 years, and by and large, I've been kind of, a little slowness, a little extra regulation maybe isn't the worst thing, particularly as it relates to retail investors, unless somebody can tell me that we as the United States really run the risk of falling behind other parts of the world, other countries in the development of a security, an asset class, a product. Do we run the risk of falling behind other parts of the world in crypto?
Oh, that risk is already quite real.
Okay.
What you're definitely seeing is other geographies where either governments are taking a much more active approach to the development of central bank digital currencies. They may be already having enacted laws or rules around, favorable taxation considerations around crypto assets and crypto trading. You have certain parts of the world that have even adopted things like Bitcoin as a form of legal tender. And unfortunately, the crypto ecosystem is not going to wait for the U.S. government or others to, kind of catch up on the regulatory front. So we do run the risk of pushing some of these innovators, some of these companies, some of that job growth outside the U.S. if we don't have that, proper infrastructure.
Michael, really quick, 25 seconds. So where does this leave you with your suit against the SEC? Any update? Very quickly, please.
We have common sense arguments around this. We feel very strongly that this is the best thing for investors, and we will continue to put the full resources of the firm behind it.
All right, we got to run. Hey, listen, great to check in with you again. Grayscale Investment CEO Michael Sonnenschein joining us on the phone in New York City.
CRYP Go. That's our crypto function on the Bloomberg terminal. Got some good stuff there. Brings a lot of the different securities together.
Yeah, absolutely. And I feel like a lot more to be known, I think, when it comes into the integration into kind of the financial establishment. You are listening and watching Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So one of the more crazier stories, I guess we could say today, it's a stock that's up, Electronic Arts.
Yeah, I'm not sure what to make out of this. I don't think the market is either.
No, I don't either.
But we'll get to it.
We will indeed. All right, right now, though, we're going to get back to Doug Krisner with a check on the trading day. Less than a half an hour to go, Doug.
So do you want me to pick up with the Electronic Arts story?
Yes,
I can do
please.
that. So earlier today, we had a report in USA Today that Amazon is preparing to offer to buy this video game company. But CNBC is pushing back on that, according to a conversation that CNBC apparently had with folks at Amazon or someone in the know. Amazon not prepared to do that at this point in time. Maybe if you let the market function, you can get a cheaper price sooner, because I'll tell you, the way we're headed right now, that's entirely possible. Equities are reacting to kind of a wake-up call today from Fed Chair Jay Powell. S&P down 3% right now. The Dow is lower by nearly 2.7%, and the NASDAQ comp off more than 3.5%. So the message from the chairman, it's pretty simple. The Fed is going to continue to raise rates, and they will leave them elevated for a while as it fights inflation. There's also this idea of a Fed pivot, right? Well, Powell pushed back at that pretty ferociously today, saying any notion that the Fed is going to reverse course soon, he kind of dismissed that. And he went on to say that an unusually large increase in the Fed funds rate may be appropriate at the September meeting, although he really didn't commit to that. Now, if you look at the bond market, not a lot of movement at this point in time. There was more volatility earlier in the day. Two-year Treasury is only up about 3 basis points at 339. The equity market, though, taking a lot of the selling. Dollar strength, with the Bloomberg Dollar Spot Index rising 0.4%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug Krisner, good stuff. We appreciate that. Yeah, this story on Electronic Arts is up 4% today. USA Today, not necessarily the publication I would think of that would be breaking business news, out with a story that Amazon might be taking a look at Electronic Arts. Not really sure how that would play out, although I'm sure they have some interest in the gaming space because, boy, it's a fast grower. Molly Schutz, U.S. Technology Team Leader for Bloomberg News. She joins us on the phone from New York City. Molly, what's your reporting telling you today?
Hi. Yes, this was kind of an interesting chain of events that happened today. Like you said, USA Today, in their gaming vertical called For the Win, another Swedish publication, GLHF, reported that Amazon was set to announce today a bid to buy Electronic Arts, which is one of the biggest gaming publishers in the world. It publishes titles like FIFA and Madden and Apex Legends. So this immediately sent EA shares up about 16% in pre-market trading after that report hit. And people started scrambling, getting ready to, wait for this news. It didn't seem all that outrageous. We've known that Electronic Arts has been in play this year amid a lot of consolidation in the gaming space. But it is surprising because Amazon has done a lot of acquisitions, and they're under intense antitrust scrutiny in Washington for all of this, and nobody really thinks that there's a lot of scope to do another big acquisition. But then later in the day, the report got walked back. First, CNBC's David Faber said that this probably wasn't going to happen, that this was false. And then USA Today actually put a note out on that column saying that this report by GLHF violated their standards about non-sourced reporting. So it kind of leaves things up in the air. Certainly, we didn't see anything confirmed by EA or Amazon today, and both companies declined to comment on the report.
All right. What about Apple or Disney? Have they maybe said, because they've been talked about, right, as potential suitors for EA. So I wonder, where do you guys do as somebody who follows this? Where do you go with this now? Or do you just say, okay, everybody's declining comment, we just got to wait and see? Or are investment bankers talking about it at all?
I mean, so like I said, ever since earlier this year, there was a wave of consolidation in the gaming space. Microsoft is buying Activision Blizzard for $70 billion. Take-Two is buying Zynga for about $12 billion. Sony is buying Bungie for about $4 billion. and on and on. And then that kind of put every remaining gaming company, big gaming company, up in play, including and especially Electronic Arts and then Ubisoft, which is based in France. Both of those two companies have been, highly speculated to be takeover targets. And yeah, the big tech companies from Apple to Amazon to even Google, who have all been looking to break into this or, either break into or amplify their own current offerings and endeavors in the gaming space, because like you said, it is the biggest industry or segment in the entertainment industry overall. It's fast growing, and especially during the pandemic, everyone was on playing games. So they all want to get into the space. So it's definitely something that they're all talking about. How seriously, we're not quite sure.
Are you a gamer, Molly?
I am not.
You are not. Okay, you can hang with us.
Yeah. But I'm learning a lot about it, and we definitely have very wise reporters on the team who know and play all the time.
Well, our very own Matt Miller is a gamer, and he's not the demo for the gaming. I keep pointing out to him. But one of the things I notice about the gaming business, it's kind of like the movie business. It's really a hit-driven business. And I know EA has had some disappointments recently. Battlefield 2042 was released last November to mediocre reviews and poor fan reception. It's tough. It's not an easy business. So I guess if you're Amazon or any of these other people, maybe it's easier just to buy it than to try to get into it organically.
Yeah, I mean, Amazon has definitely had its own struggles with, within the gaming space. They do have a gaming arm, but they have struggled really to create their own hit. And like you said, these gaming publishers, they often do have one or two hit franchises, whether it's Call of Duty or Grand Theft Auto or Halo. These are big games, but they are kind of I don't want to say really one-hit wonders. They often get updated over the course of the year. They come out with sequels and so on, but they're kind of the one big thing carrying the company. And what gaming companies are more and more doing is, there's a lot of microtransactions within the game. People are spending more on perks and customizations within the game itself, and also they'll pay more to get maybe the next incremental update in a game through what they call live service games. So that's kind of where the money is coming from there.
Is there any chance, because the stock is still up, certainly off its highs, in what is a overall downward day, risk-off trade, that suggests that investors expect something's coming, or we shouldn't read too much into it? Just got about 20 seconds.
Yeah, I think everyone is expecting something will happen, whether it's Amazon and whether it's today. Not sure.
All right, Molly, good stuff. Really appreciate it. Molly Schutz, U.S. Technology Team Leader for Bloomberg News, joining us on the phone from New York City. Again, I'm not a gamer, but I do know it is a big business, as Molly mentioned, the biggest segment within overall entertainment. It's just become it's bigger. When they drop a title, it's bigger than an opening of a Star Wars. I mean, it's just incredible the money that's going into that business, and the business is growing. Right now, let's go down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. Much of the affidavit that was used to justify an FBI search on former President Trump's Florida home has been redacted, but it is clear authorities were worried about the handling of classified materials. And Loyola law professor Laurie Levinson says the FBI had apparently been trying for quite a while to retrieve the documents.
There was obviously an ongoing concern about whether Trump was withholding documents, not because he didn't know he had them, but because he was digging in his heels that he had the right to have them and do what he wanted with them or declassify them or whatever. And that obviously led to the Justice Department collecting more information to get this warrant.
Loyola law professor Laurie Levinson. Inflation eased last month as energy prices tumbled, raising hopes the surging costs of everything from gas to food may have peaked. Consumer prices rose 6.3% in July from a year earlier after posting an annual increase of 6.8% in June. That was the biggest jump since 1982. A woman carrying a fetus missing part of its skull is now suing the state of Louisiana for refusing to allow her an in-state abortion. Nancy Davis and her husband discovered weeks ago the fetus has the rare condition called acrania and will die almost immediately after birth.
I want you to imagine what it's been like to continue this pregnancy for another 6 weeks after this diagnosis. This is not fair to me, and it should not happen to any other woman.
Davis says she was told by doctors in Louisiana she would have to travel out of state to terminate the pregnancy. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Masser, along with Paul Sweeney, here in our Interactive Brokers studio. And looking at the most read, there's a story, and I just shared it with you, Paul, and it's from Dow Jones Wall Street Journal. The workers who relish going to the office on Friday when no one else is there. I do have to say, from someone who used to come into work really early on the TV side, like at 3:30 in the morning, I kind of loved walking in because it was so quiet, felt like I had the office to myself. On Friday, it's pretty quiet around here.
It's pretty quiet. And what I tell, when I'm hiring somebody, when I'm recruiting somebody, one of the things I tell them is, I've worked at 6 investment banks, and when I walked into Bloomberg, the 6th floor here at 731 Lexington, or on Queen Victoria Street, or wherever you go, the buzz is palpable from the second you walk in. Young people running around, doing stuff, exchanging ideas, getting food. The buzz is just contagious, and it really gets you riled up and ready to go and gets the juices flowing. It feels like you're on a trading floor in terms of that kind of buzz, and I say that is a great thing to be around. And the pandemic's changed that. And particularly, we're like most businesses, Monday and Friday, light, Tuesday, Wednesday, Thursday, a little bit more.
You really feel it, I feel like, on a Friday.
Yep, I notice it commuting, New Jersey Transit.
Right.
It's tough to get a seat Tuesday, Wednesday, Thursday, as it is a usual day. Monday and Friday, I'll have 3 or 4 people on my entire car.
So it's like.
But on Saturday, trains are packed. Everybody's coming into the city to go to shows and restaurants and all that kind of stuff. They're just not coming into the offices. So I don't get why people are living in the city but not working in an office. That seems odd to me.
Yeah, I don't know what to say. I talk with a lot of individuals. I think, and heads of companies, like I do think a younger workforce likes the flexibility. I think the pandemic showed us, we saw that how we could do really well our broadcasts at home, and who would have thought? I don't know. I just don't know how much of all this sticks, but I do say you do lose, I think, some of the corporate culture when you're not all in the same place. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market at session lows as we make our way to the closing bell, all in reaction to Fed Chair Jay Powell delivering kind of a wake-up call, a very hawkish message today at the Jackson Hole Symposium. Powell saying the Fed is likely to keep raising rates and then leaving them elevated for a while until it's satisfied that inflation is under control. He also vehemently pushed back against this idea that we're going to see a pivot, that the Fed would reverse course anytime soon. And he went on to say another unusually large increase in the Fed funds rate could be appropriate at next month's meeting, but he did stop short of committing to that. If you look at the bond market right now, not a lot of movement, a little bit of elevation in yield at the short end of the curve. 2 years only up 3 basis points in yield, 339. It seems as though the bond market has been paying closer attention to what Fed officials have been saying recently than the stock market. Dow Industrial Average down 2.9% right now. The S&P off more than 3%, and the NASDAQ comp down 3.8%. Seeing some dollar strength creep into the equation today. The Bloomberg Dollar Spot Index rising by 0.5%. I'm Doug Prisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening and watching Bloomberg Business Week. Carol Master, Paul Sweeney, and it is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Chinese leaders seized upon U.S. House Speaker Nancy Pelosi's high-profile visit to Taiwan earlier this month to launch the largest military exercises ever conducted near the island. Although Chinese missiles are no longer arcing over Taiwan, things have hardly returned to normal. To reestablish a more favorable equilibrium, the U.S. will have to do more to both deter and reassure China. That means moving military resources to the Indo-Pacific and stepping up cooperation with regional allies, while also avoiding noisy symbolic gestures that needlessly provoke China. The aim should be a mutual understanding that Taiwan is a long-term issue to be managed. However messy and unsatisfying such a compromise might be, it would be better than sliding into a conflict with incalculable cost. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, can't believe it. 10 minutes away from wrapping up the Friday trading session and really wrapping up what has been a week where we counted down every day to Jay Powell. We heard from him earlier today, and as a result, Paul, we had stocks selling off. We're pretty much hovering near our lows of the session, a risk-off trade, no doubt about it.
They delivered for those people that were looking for a bombshell. The S&P off 3.2%. That really gets your attention.
Yeah, absolutely. All right, so let's see what gets our next guest's attention. Leo Kelly is back with us, founder and CEO at Verdance Capital Advisors. He's on the phone from Hunt Valley, Maryland. Leo, nice to have you back with us here on Bloomberg Business Week and joining Paul and myself. So, I don't know, what's the long-term investment strategy now that we've heard from Jay Powell in your view? Or can you even make that bet?
I think it definitely can make the bet. You have to just understand that which has worked in the past doesn't necessarily work going forward. We've talked about this in the last time I was on. Mm-hmm. What we are getting is confirmation that this inflation issue is not something that just magically goes away. This is not a temporary or an issue that is just a result of some short-term anomaly. This is real. It's going to take a lot of effort, and I think it signals a secular change in interest rate movements and the end of a 40-year bull market in bonds. So the way you have to invest, Carol, is you have to look at inflation-oriented investments, value, international, private investments, real estate, and you have to be extraordinarily careful with your bond portfolios. The days of 60-40, put it in and go to sleep, I think are behind us.
So what do we do in that kind of scenario there? I mean, it sounds like, again, what we heard with clarity today was looking at inflation very aggressively, acting against it very aggressively, even at the risk of recession. I'm not sure where I go in that environment. What would you be telling some of your clients here with fresh money?
Well, I think what we heard from Powell today shouldn't have been a surprise. I was surprised at how aggressive he was with the language. I thought he'd be a little bit more balanced. But, I mean, we heard Esther George earlier say, hey, this inflation thing's not over. That was earlier in the week. I don't think going from 9.1 to 8.5 signals the end of inflation. And so I do think what Powell said today, kind of in a hidden fashion, was our third mandate is no longer a mandate, and that is the protection of asset prices and the protection of wealth, or the wealth effect in the country, is no longer our mandate. It has been for about 15, 20 years. Let's call it the unspoken mandate, and that's over. That's, by the way, how serious this inflation issue is. So you have to start to look at investments that do well in inflationary environments, whether it's commodities or industrials, real estate, financials. There's places to put money in this kind of environment. I would also say, Paul, one other point, and that is, remember, the market is already pricing in really a problematic environment. We were down 20%. We've had a nice summer rally. It's very rare that bear markets go down once and then go off to the next bull market. Right. This is the normal course of working through a bear market.
Well, Vince Signorella, he's a macro strategist here at Bloomberg. He spent decades on the street trading. He has a bullish call, which I know others share, which is, hey, inflation's coming down anyway. This Fed's going to raise a little bit, then they're going to stand pat, and that's going to set the stage for a risk-on rally into the end of this year. I mean, we had some housing data that came out today. You had some University of Michigan sentiment data came out today. Gasoline now down below $4 a gallon. Some of those inflation things are, in fact, coming down. Does that set the stage for maybe this Fed kind of, giving us 75 and then maybe sitting on the sidelines a little bit?
Well, if you keep raising rates 75 basis points a meeting, sooner or later, inflation will start coming down.
Yep.
If we keep beating the consumer over the head, they'll slow down their spending. I mean, we're headed into a little bit different world now. We're starting to see consumer discretionary spending start to back off, and consumers are going to have to start making a choice. Yep. And hopefully,
they already are in a big way over in Europe. We've seen that.
And in Europe, they've gotten to the point of really some severe choices.
Yeah.
I mean, I grew up through the first big oil push and inflation run, and we lived in a kind of a modest upbringing, and I remember the choice between food and heat a couple months, and that's a tough choice to make. And because of the inflation in energy prices in Europe, they're making those kind of choices this winter. So inflation will come down because of inflation. And that eventually works, but just be aware of the signal.
But at what cost, right? And I think about, as you say, individuals, the choices you had to make or your family had to make at one point, and you do wonder. I mean, Jay Powell even talked about that certainly the cost for some individuals, it's going to be tougher than others.
The cost is significant, but there's a greater cost in not taking care of this right now, because this is an insidious tax, and especially on low to middle income consumers. Because remember, even if we come down from 9 or 8.5 down to 5, that's 5 over the previous year's inflation, which is over the previous year's inflation. So until we get to disinflation, we're not taking prices down. We're just growing the cost slower. So there's a lot here to unpack for Powell, and I think this was a clear signal for the Fed to be this hawkish for the first time in as long as I can remember, right? Since the mid-90s, probably, they were this hawkish. That says that they are seeing that this inflation is not over. And energy is a very volatile asset, as we know.
Hey, Leo, really quickly, like 20 seconds, are we headed for a really problematic market potentially next year?
No, I actually, so as bearish as I may sound, we actually.
Hence my question.
Sure. No, I think, remember, that's the point of a bear market, right? Prices go and move in advance of all of this, and we've already been down 20. What we've warned investors is bear markets are volatile. It takes a few knocks at the bottom before you come out of them. But I will tell you, we are less apt to sell into rallies. We are more apt to buy into dips.
Okay.
Because we still have to rebuild the supply chain, rebuild inventories.
Got it.
And when inflation slows down, the consumer should be fine.
All right. You have a good weekend. Leo Kelly, founder and chief executive officer of Verdens Capital Advisors, joining us on the phone from Hunt Valley, Maryland. He did sound pretty bearish. And it's pretty bearish on the markets. Hey, folks, we're going to head over to our TV colleagues, our cross-platform coverage, radio, TV, YouTube. We're counting you down to the close on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld counting you down to the closing bell. Here to help take us beyond that bell. It's a global simulcast. Carol Massa, Paul Sweeney in for Tim Sternovic, and we go across platform, TV, radio, YouTube to dissect what is a pretty ugly day, no matter how you look at it, Carol. From a stock market perspective, we are down 3.8% in terms of your overall NASDAQ, and actually volume starting to rise on the Dow and the S&P.
Yeah, right. We're seeing that selling and that momentum, that volume really pick up as we are just a few minutes away from that closing bell. I'm looking at the S&P 500, Paul. There is nowhere to hide. Most names in that index are down today.
Yeah, nowhere to hide is exactly right. And, we saw it just kind of selling into the close, which gets my attention here with some conviction, it feels like. And so if Jay Powell wanted to send a message to the market, message received.
Mm-hmm.
Indeed, it seemed like an equity market that maybe listened today, realized that there wasn't a pivot. Maybe we made that up and that they're firmly full steam ahead. It's a bond market, at least, that is still seeing a slight elevation on the front end. Katie, yields are still up about 2 to 5 basis points on 2s and 5s, but everywhere else it sort of seems classic flight to safety.
Yeah, you are getting a bit of a bid into the long end. I'm looking at 30-year yields down about 4 basis points, so a little bit of an offset to that pain that we're seeing in the equity markets, but not by much.
Not by much. At the moment, we've really seen pain trade accelerate from what was a hawkish ECB that then filtered in a bond market that backed up, certainly over in Europe, to then filter into a hawkish sentiment from a Federal Reserve. And of course, the issue came in the equities hard and fast.
Yeah, and when I look at the VIX right now, up 3 points, Caroline, going above 25. So some concerns and nervousness in the market.
Yeah, well, people trying to de-risk as we head towards this weekend. We're currently off by 141 points. S&P 500, the bell rings. Not much to cheer about on this day. We're off by 3.3%. So if you've been long the S&P, it's been a painful trade. And as we always say, only about six stocks in the green entirety of the S&P 500. The NASDAQ is off by 3.9%, so big tech on the downside and feeling the most pain. We're also seeing the Dow Jones off by some 3 percentage points. 1,000 points, Taylor, more than 1,000, 1,008
Thank you.
points
I love a good
down.
point count.
Yeah, you wanted us to really go there when it came to the Dow. And I'm looking at, really, the Russell 2000 off by 4%. It's kind of astounding overall, Carol.
Yeah, really, just across the board here. I'm looking at the S&P 500, the individual names in the index for the week overall. And of course, no surprise, guys, Taylor, those top performers for the week overall, all those energy names.
Yeah, you really actually don't see that, though, on the day, Carol, as we sort of focus in on where we are. For our radio audience, the sector winners, the sector losers, everything is in the red. Let's start with some, quote, the best performers, energy. To your point, Carol, you're still off the 1%. And then all the way down at the bottom, everything is off even 3 to 6%. Some of the worst performers, semiconductors, media and entertainment, tech, hardware. I mean, again, you're off at least 4% on all of those sectors.
All right, so let me get to some of the individual names. Fingers crossed that they're still in the green, and it looks like they are. So Electronic Arts, definitely off its highs of today in the pre-market, but still finishing up the day with about a gain of 3.6%. USA Today saying maybe Amazon is getting ready to do a bid, then walking it back. It was kind of back and forth. We talked with our Molly Schutz. This is a name that is often talked about as a takeover target, but nonetheless, one of the names rallying in today's session. Workday, we talked about their results reported last night. That stock finishing with about a 2.5% gain. It was up as much as 10% earlier in the trade. Application software company, second quarter results that beat, reiterated its forecast for the year. And one name, I think, Katie, you talked about it earlier, Molina Health, ticker is MOH. This stock up about 3.4% in today's trade. California intending to award it a contract, a Medi-Cal contract, and this is one of the 3 managed care companies that seem to be getting some of the business from the company. I mean, not from the company, from the state. So nonetheless, Paul, we saw some gains in that name in today's trade.
I had a lot more to choose from. The easier assignment today. Decliner shares of NVIDIA continue to trade lower on signs of chip weakness across the sector. Katie called this out the last hour. Late Wednesday, the company gave a disappointing revenue outlook after already cutting revenue guidance earlier this month. Share of home builders, including Lennar, trading down after downgrade of the entire group by Bank of America analysts. They're citing weaker demand, and higher interest rates certainly aren't good in the mortgage market, so that's an issue there for that group. And Apple, it's off about almost 4% today. Department of Justice lawyers are in the early stages of drafting an antitrust complaint against Apple. Now, that's according to Politico reports, citing an unidentified person with direct knowledge of the matter. So we're going to have more reporting on that coming up. But Apple down almost 4%.
I mean, no place to hide when the most valuable stock falls that much, Paul. But I'm looking at what's happening in terms of really where the mood music started. We were worried because it came from the ECB largely. We saw German borrowing costs rise. I'm starting on a cross-asset perspective on sovereign bonds here in Europe. We saw Italian yields up 16 basis points on the 5-year. Austrian, Belgium, Portuguese yields push higher as we think the ECB gets more hawkish. And then, of course, out comes Fed Chair Powell and just reiterates how much they're still focused on inflation. And talking about inflation, we just see Brent crude actually managed to lift. And it's surprising that oil managed to push higher in the face of that hawkish commentary and what that might do to the economy, in the face of a stronger US dollar. Steel down, iron ore was down a little bit here in US trading at least. And I'm looking at what happened in the foreign exchange market because indeed it is a sea of red versus the US dollar. It was King dollar up as we anticipate more rate hikes, and indeed a Kiwi dollar that weakens to the tune of 1.5%, Taylor.
The yield curve, Caroline, when you think about where we are within the U.S., yields on the front end rising a little bit, maybe 1 to 4 basis points on the curve. I think on the long end, Katie and you and I have been talking a lot about this, down 5 basis points. Interesting comments I get from a lot of the bond investors, a few writing in saying that Powell today has sort of sealed the deal for this recession. When you take a look at 2s 10s, 2s 30s, still further inverted, on really signaling they're focused on inflation and that they will accept some pain on that labor front to get inflation back under control. I think Jim Bianco over at Bianco Research, of course, told me earlier that inflation affects everyone. A recession only affects those who lose their jobs. So if you're thinking about how to really tackle one of the broader problems, that is it. Of course, if you're one of those who loses your job in a recession, you might have a bone to pick. But I think sort of big picture, that's the narrative in terms of how we're thinking about this.
And it feels like Powell was really clear about that trade-off today, that they can't just fight inflation in isolation. That's going to come with some sacrifices in terms of economic growth. And I mean, to the point we've been making all afternoon, it feels like equity markets finally listened. I would argue that bond markets did too. I mean, if growth is going to slow and be below trend, makes sense that you'd want to be in long-dated treasuries.
Yeah, it does make a lot of sense. It's interesting that you guys talk about, as we focus in on inflation, of course, Jay Powell did, but we talked with Leo Kelly over at Verdance Capital, and he said inflation will come down because of inflation. There's a point where we all are already seeing it, where people have to make some choices, and that will ultimately reduce some of the demand and bring down some of that price pressure, Paul.
Yeah, well, in honor of John Farrow, who does not like to quote the Dow Jones Industrials, that 1,008-point decline gets my attention. What also gets my attention for the Dow volume. Volume was up 15% versus the last 30 days trading today. So the people, they came off the beaches, they came back from the pools, and they traded today.
Yeah, and they saw not a single Dow Jones member in the green, all 30 falling. And overall, Paul, I think we then kick it forward to what's happening next week. We look forward to a jobs market that perhaps starts to show that trade-off as soon as this Friday when we get the non-farm payrolls. But before that, we do get some further reads as to really where some of the individual stocks are going. We still get some consumer names. Think of Best Buy. They, of course, had to downgrade their outlook. What are they going to say as soon as next week?
Some strategic updates coming from some other consumer companies. I know that, Katie, we're going to be looking at maybe Tuesday or Wednesday in some of our triple take conversations as well. And perhaps maybe the divergence that we're seeing between how the consumer is feeling versus how corporations are feeling. Because we've gotten some comments that in some sectors, corporate IT spend feels really strong, but then you are hearing that maybe companies are pulling back in other ways. So I am really curious to hear about how that corporate IT spend holds up.
And sort of when you think about the differing sentiment between the corporations and the consumer, at a certain point you would think they have to merge, especially if some of those corporations are starting to do layoffs, for example. I mean, that's going to be felt at a consumer level. We've seen that consumer be very resilient thus far, but at a certain point, I mean, it's just a circle.
Well, then we go back to, speaking of circles, let's go back to that monthly jobs report, which we will all be talking about 1 week from now. You know, it's expected to come in at 300,000. We're talking about non-farm versus 528,000 the month before. So what do we want to see as investors? What do investors want to see? Still a strong labor market that says, okay, maybe we're not headed towards recession, but not too strong that maybe the Fed can start to think about tapering off at some point, although I'm not going to use the word pivot, Paul.
I know, and this is a Fed that says it is data dependent, and we're going to get several data points between now and September, but boy, with the conviction that we heard from Fed Chairman Powell today, it's higher, and it's higher for longer.
I don't know if you realized I hosted Real Yield today. I've heard that. We do rapid fire questions. Carol, at the end, I asked all the guests if we're going 50 or 75, and they said that jobs day will be the number, and if it comes in strong, this is a Fed that they have the ability to go 75. Yep. Front loading, again, really to pull forward some of those expectations.
Yeah, it gives the Fed a lot of room to be a lot more aggressive. Don't forget the U.S. Open starts here in the New York metro area. Paul, do you know about that?
I sure do.
That starts on Monday.
Wasn't Serena Williams ringing the bell actually earlier today?
Was she?
I don't know. I saw that on Instagram. I have to double check.
We'll have to fact check.
But Serena Ventures, that's the place.
Yeah, and it may be her last one, right?
Yep.
In terms of her major tournament, she says that. All right, guys, have a great weekend, a safe weekend. That's a wrap for us on TV, radio, and YouTube. Our cross-platform coverage, Beyond the Bell. What a week it was. We will see you again, same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, welcome back to Bloomberg Radio. Boy, what a day for traders today. So much for the quiet trading day. S&P off 3.4%, NASDAQ off 3.9%. And again, as I just noted on our simulcast, some real volume out there today. This wasn't what you would typically call just one of those, you know, lightly traded days and you really can't put too much stock in it. No, there was some volume accompanying this price movement.
Well, especially after 2 days of really light volume when we saw some gains.
Yep. All right, let's head down to Washington, D.C. We'll get world and national news with Nancy Lyons.
Thanks, Paul. The FBI affidavit used to get the search warrant on former President Trump's Florida home is now public, with large sections blacked out. Bloomberg Washington correspondent Joe Matthew reads from the document's conclusion that was written by an unnamed FBI agent.
Based on the foregoing facts and circumstances, many of them redacted, I submit that probable cause exists to believe that evidence, contraband, fruits of crime, and other items illegally possessed will be found on the premises.
Again, Bloomberg's Joe Matthew reading from the affidavit. 14 of the 15 boxes recovered by the FBI from Mar-a-Lago contained classified documents. Moderna says it is suing rival Pfizer and BioNTech, claiming the technology in their COVID-19 shot infringes on its patents.
Moderna says the pair copied its mRNA technology without permission, and the company is not asking the courts to pull the Pfizer vaccine from the market, nor is it asking to block future sales. Moderna is seeking damages. Early in the pandemic, Moderna said it would not enforce its intellectual property, but they modified that pledge to apply only to lower-income countries. The lawsuit sets the stage for a massive legal clash between the three vaccine giants. In Washington, I'm Amy Morris, Bloomberg Radio.
NBC is reportedly looking at chopping its primetime TV hours to cut costs. According to the Wall Street Journal, which cited people familiar with the plan, the network would eliminate the 10 p.m. hour every night, giving those 7 total hours to local stations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. We appreciate that. We're going to follow up right on Nancy's story because that's where I wanted to go as a longtime media industry analyst. NBC considers cutting back programming hours in primetime. That's per the Wall Street Journal. And the reporter here is Joe Flint. Joe Flint has been one of the best media industry reporters out there for decades. He's got phenomenal sourcing here. So along with our great media reporters here at Bloomberg News. But, you know, this is simply just another, I think, just example of the slow but now accelerating death of kind of broadcast and cable television. Everything's going streaming. So why put programming investments onto your broadcast network, which is carried by cable operators and satellite operators, if people are just cutting their cords? And so what we're finding is a lot of these big media companies are just putting more of their programming investments because they know the future is in their streaming. So, for example, for Comcast, which owns NBC, they have Peacock. Peacock's the future, not an NBC platform, except for sports and news.
Well, it's interesting, too. And, for someone who knows this industry so well, I mean, how do you think about it in terms of where the revenue growth is, right? It is on the streaming platforms, right? That's where all the ad dollars are increasingly going towards?
Yep. Absolutely. And so if you're all these big media companies, you have to make the pivot and try to chase this Netflix model, which we didn't even know existed before Netflix.
Right.
And it's too bad because for the media companies, they would say, boy, we wish we could turn the clock back 10 years because that was just a time when we made tons of money because we had just a great model. Everybody had cable. Everybody paid us for our content. We made a lot on advertising, but Netflix changed.
Was it you who talked earlier, I think, on either Surveillance this week, where, we don't have those water cooler moments, right? Where, I'm going to date myself, but Dallas or like The Sopranos or something. Like we all came in on Monday and we're like, can you believe what happened? Because you just can, you binge, you just watch so differently.
I think it's a different, and I think it's an inferior experience, the video experience, to what we grew up with because it was a
destination viewing.
Destination viewing. It was very communal. Now I don't know what my friends are watching. They don't know what I'm watching, or if we're watching at different times.
Exactly.
Oh, I'm on season 3. You're on season 4.
And we always talk about, have you seen this yet? Because you just don't want to, spoiler alert. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
The equity market suffered a rout today. It was in reaction to kind of a wake-up call from Fed Chair Jay Powell. He essentially said the Fed is likely to keep raising interest rates and then leave them at elevated levels for a while as it fights inflation. And then he pushed back against this idea that the Fed would reverse course anytime soon. He did say that another unusually large interest rate increase in the Fed funds rate could be appropriate in September. Obviously, a big concern for markets when you look at the price action today is that restrictive Fed policy leads us into a recession. The odds, you would argue, are much greater today. This is one thing that the Fed has been trying to control, right? Financial conditions, it wants them much tighter. That's what we got. Lower equities, stronger dollar. Bloomberg Dollar Spot Index today rising nearly 0.5%. So back to the equity wipeout. Dow Industrial Average down 0.3. Checked at 3% today. 0.3, yeah, right. S&P 500 lower by 3.4%. NASDAQ comp down nearly 4% today. And in the bond market, very little movement on the long end of the curve. 2-year Treasury, though, picks up about 2 basis points in yield at 3.37, but that 10-year firm at around 3.02%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So a recent Bloomberg Business Week cover story was about American women at the breaking point, noting how American women helped the country achieve 50 years of prosperity and how the undoing of Roe versus Wade made everything far more precarious. Our next guest has written extensively about the advancement of women and struggles with such. Graduated from Wellesley College, the same class as former U.S. Secretary of State and former presidential candidate Hillary Clinton. Her biography of Elizabeth Cady Stanton inspired a Ken Burns PBS documentary, and she has a new book out that chronicles the efforts of white and black women to advance sometimes competing cause. So great to bring in our guest.
Yeah, Elizabeth Betsy Griffith, historian and author of the book Formidable, American Women and the Fight for Equality, 1920 to 2020. Joining us on Zoom from Chevy Chase, Maryland. Betsy, thanks so much for joining us here. What a tour de force here. I was just trying to get through the first chapter or two. There's so much stuff there. And what I like about this, or what I think as I'm going to read this over the weekend on the beach at the Jersey Shore, is it's not white and black women. It's kind of, they're all together. It's one big, I guess, journey. Talk to us about how you approached women and rights and those types of developments.
I started with the question of what happened after women won the vote and were added to the U.S. Constitution on August 26, 1920, 102 years ago today. What happened next? Journalists would say a decade later that the 19th Amendment promised almost everything and accomplished almost nothing. They made a huge stride to break into voting, but then white women rarely voted and black women were barred from voting by discrimination at the state level in voting laws. So these women had more to do. White women would pursue running for office and legislative agendas and a sundry list of causes. Black women had an even broader agenda. They wanted to safeguard Black Americans. They wanted to end lynching, end discrimination, and try some ways to secure equal rights. But it was so dangerous for them to behave in any public active manner that many of them acted behind the scenes very quietly out of church basements as deacons or agricultural agents. So it is a complicated story in American history, but I think we need to accept that our history is complicated and learn as much about it as we can, because I think it's the only way we'll get perspective on today.
It's kind of a funny day where, we heard from Fed Chairman Jay Powell, who talked about the importance of looking at things in terms of history, monetary policy. And his point is we can learn from history and that we have to stay the course with higher rates in terms of bringing down this inflation. We've already seen by not doing that what it means for the economy. So I think it's important, like you say, looking back at history and telling it. I do wonder, and forgive me, we talk so much about women and not being able to maybe move ahead as much as men. I mean, how much do you blame women for kind of where we are today? And not learning from history, perhaps?
Carol, I'm not going to blame women for the patriarchy of our country, which has bred sexism and racism into our society. Women have made enormous gains since 1920, but we haven't come anywhere near far enough. Just speaking in terms of economics, the jobs that the majority of women hold are in the lowest part of the employment sector. The jobs, there are 98% of kindergarten teachers are women, 76% of public school teachers, we're only 38% of lawyers. We think we've made a lot of gains because women are so much more visible, and many women have succeeded enormously. But until a lot of women, more women, have that access, that agency, that privilege, we aren't anywhere near there. So the fight is not done, and we're facing some setbacks now. The reference you made to the whole reproductive rights issue, women who can make decisions about when to have babies, how many babies, the age of they are when they have babies, then can make decisions about education, about their employment. And one of the reasons women succeeded as rapidly as they did in the last 50 years was because they had reliable birth control and constitutional right to end a pregnancy if they needed to. There are so many issues that contribute to the equal rights of Black and white women, and they still need to be addressed.
Just real quick, maybe in the next 30 seconds, just give us an anecdote from your book that really summarizes kind of the struggle in the early years.
It is hard for women today to imagine not having any rights, not having, in the 1920s, not having the right to own property, in some states not keeping their wages. Women did not serve on juries just because they got the right to vote. They didn't have a right to divorce widely or child custody, access to very few jobs, access to limited education, still in the 1920s. It seems incomprehensible to women today that women could have been so powerless. Yet they had moral authority, they had the ability to create alliances, they could organize, and so it's very impressive, the gains that they made. It was hard to win suffrage, a very long, hard fight, and then it was hard to use suffrage.
Hey, Betsy, sit tight for a second. We're going to do a little bit of a commercial break and some news, but then we're going to come back because we do want to continue with you, and I'm curious about what we can learn from history as we look forward. Betsy Griffith, historian and author, we're talking about her book, Formidable. More to come.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week. We're going to get back to our guest. We're talking with the author of Formidable, American Women in the Fight for Equality. It is such a timely topic, I feel like, Paul, with everything going on, including Roe versus Wade.
Yeah, absolutely. It's a never-ending struggle there for women, for white women, black women, all women out there. It's been a challenge and one that corporate America is trying to grapple with, I think.
I'm already getting feedback on Twitter, so we're going to continue our conversation. Back, though, to Doug Krisner with an update on the Friday trade. Hey, Doug.
Pretty blunt message, I think, from Fed Chair Jay Powell. The message is the Fed is going to keep raising interest rates, and it will leave them there elevated for a while as it continues to fight inflation. Powell also pushed back against this idea that the Fed would soon reverse course, and he's expecting the economy essentially to slow as the Fed works to bring down those prices. So then the question is, are we headed for recession? Maybe the equity market is convinced of that. S&P 500 today weaker by 3.4%. Consumer discretionary was down today. Information technology, communication services, those three groups taking the brunt of the selling. Dow Industrial Average off 3% today, and in the NASDAQ market, the composite index was down about 3.9%. Curious today, right? You get this hawkish message from Powell on a day when the Fed's preferred measure of inflation, the PCE deflator, down in the month of July by 0.1% compared to June. That's the first negative print since the beginning of the pandemic. Are we at peak inflation? Have we seen peak inflation? Important questions to be sure.
Have you paid for gasoline prices lately, Doug?
I'm not saying that it's not here. The question is, have you seen the price of crude oil?
Yeah.
We're well below where we were. The question is peak. Yes, it's hot. It's sticky, I'm sure. But the question is, are we at peak? Okay, let me continue. Thank you, Carol. U.S. consumer spending.
Ouch.
Yeah, boom. Posting a sluggish increase in the month of July, and we learned today that consumer sentiment up more than expected in August. Inflation expectations are easing for the year ahead. I'm Doug Krisner. That's your Bloomberg Business Flash.
You know I adore you, right?
I know that.
All right.
All right, let's bring back our guest, Elizabeth Betsy Griffin, historian and author. The book is entitled Formidable, American Women and the Fight for Equality. It goes all the way back a century, 1920 to 2020. She joins us on Zoom from Chevy Chase, Maryland. Betsy, the book is, just a real narrative analysis of the decades-long women's fight for equality. Based upon all your research you did for this book, based upon everything you learned from this book, again, over a 100-year period, where do you think the women's movement needs to go from here?
I think they need to recharge. The fight to get suffrage was more than 100 years, and it was called the Long, Hard Fight. We made an enormous amount of progress beginning in the 1960s, in part related to reproductive rights, the availability of the pill, the Roe decision, but enough other things changed. Legislative change, Title VII, the Equal Credit Act, Title IX, many positive things were propelling women forward. But then there came a huge pushback from conservative women. Women are not all one thing. There's enormous diversity, racial, economic, educational, age, all those things that divide us. And there's certainly women and men who oppose the goals of the women's movement. And I think that we maybe have been riding on our success for a while and not expecting the pushback that we've been getting in voting rights, in reproductive rights. Women are still, women need accessible, affordable childcare. They need paid family leave. Those two pieces of legislation alone would have enormous impact on women's economic well-being, their participation in the workforce. So there's more to do. And I think we need to think more broadly about women's issues. Since the 60s, we've been saying every issue is a women's issue. But I'm not sure that feminists would have included food deserts or the quality of education in poorer regions of this country, or what happens in medical care. We're still seeing too much maternal and infant death and discrepancies in those treatments. We need to get back in the fight, and not just in the streets. We need to be lobbying, going to door, electing people to the legislature who support those goals. I think we're in a real period of challenge, and it will take a long time to win again, unless there are just something dramatic happens in the 2 upcoming elections.
All right, so our Nancy Lyons, who covers world and national news out of DC, is shooting us a message, and she says, you've got to ask Betsy about blue and pink timelines and how you divide history for women along the pink timeline, and something that we probably all don't know about. Can you talk about this a little bit?
Sure. There not much women's history was written before the 1970s, and it got written because the government got rid of the graduate student deferment, and so graduate schools emptied of men who went to the war, and women filled those seats. And when women are doing graduate work in history, like every other category of person who's done graduate work, you tend to study your own field. So women wrote about women. And they began to create some methodology about women, and one was to think about timelines. We have all learned the American history timeline, from the colonial period to the federal period to the Constitution to the antebellum America to the Reconstruction, industrialization, immigration, the 20s, the 30s. That's our timeline, and it's dominated, not unsurprisingly, by presidents and generals and economic leaders. And that's what we all learned. And I believe most textbooks today are still divided in that way. The 19th Amendment doubled the size of the voting population and franchised 26 million women. And you rarely get a chapter devoted to suffrage, and you always get a chapter about Jacksonian democracy. So the blue timeline marks events on your standard American timeline. A pink timeline suggests that all those blue events impacted women's lives, but there were other events, for example, the invention of the baby bottle nursing nipple, or the tin can, or the sewing machine, or the refrigerator, that made women's lives enormously better. That many wars on the blue timeline, affecting men and women differently. Wars are devastating for everybody, men and women, but they are opportunities of great economic advancement for women. They get to go into jobs that were forbidden to them. In the Civil War, they become secretaries. In the First World War, short war, but they got to be elevator operators and bus drivers. And of course, all those Rosie the Riveters filling up the factories during the Second World War.
Right.
You know very well that the women's participation in the American workforce has not declined since 1947.
Well,
so those events are on the pink timeline.
Listen, you're going to have to come back, because I would love to continue our conversation. My grandmother was a Rosie the Riveter, so I definitely feel, and I apologize for saying women blaming themselves, because I've gotten a lot of social media feedback on that, and I didn't necessarily mean it that way, but I do wonder.
Well, and I responded too sharply, so I understand.
No, you should. Come back, please. Good luck with the book, and I hope we can continue this. Betsy Griffith, great to have you here. Formidable is her book, American Women and the Fight for Equality.
All right, right now, let's head down to Washington, D.C., world and national news with Nancy Lyons.
Thanks, Paul. New details are coming to light with the release of a heavily redacted affidavit used to justify the FBI's search of Mar-a-Lago. Loyola law professor Jessica Levinson tells Bloomberg much of the document is blacked out.
The front half of the affidavit, where we have more information about the statutes and we have more information about the negotiations between the National Archives and the Department of Justice and former President Trump and his attorneys, that's all open. But then everything else leading into really the maybe more juicy, quote unquote, parts about probable cause and why it existed, that is all blacked out, and I would say for good reason.
Loyola law professor Jessica Levinson spoke with David Weston on Bloomberg Balance of Power. The Justice Department found 184 classified documents in 14 of 15 returned boxes. Moderna is suing its biggest rivals in the COVID-19 vaccine market. The drug maker has filed patent infringement lawsuits against Pfizer and BioNTech in the U.S. and Germany, accusing the two of violating patents protecting key elements of Moderna's messenger RNA technology. Moderna is not asking the courts to pull the Pfizer-BioNTech COVID vaccine from the market or to block future sales. The company is seeking damages for the period starting March 8th of this year. LastPass, a password manager used by more than 33 million people around the world, says a hacker recently broke into its systems and stole source code and proprietary information. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. And Nancy Lyons, thank you for making us ask about pink and blue timelines. Paul has been so fun behind the scenes.
I've never heard that term before, but it makes so much sense.
Right?
I want to bring her back and learn more.
Well,
I will read the book this weekend, and I'm sure I'll learn a lot there.
Will you read it this weekend?
I am.
Will you get through the whole thing? It's a lot.
No. This is a
too.
real book. Yeah, I'm going to take my time on this one.
Don't you think about like during the pandemic and George Floyd and like how much of Black history has been written by not Black individuals that I feel like we're just getting. I think about Black Wall Street and what we learned about Oklahoma and so much that I, growing up in my history,
exactly right,
learned none of that.
I know, and that's why it goes to the local school boards who gets the. I don't know. That's a political issue.
I know.
Crazy,
Sorry,
but
I'm just like going down a rabbit hole right now. Should we talk golf? Because we are thinking about the weekend.
Yeah, I mean, here's a story. It's from the New York Times. The Aramco Team Series Women event. Now, that's separate from the Live Golf Tour that upended the PGA Tour.
Wait, did I hear you say Aramco?
Aramco.
Okay,
it's called the Aramco. Is that? Did I do that right?
Yeah, you did.
Right,
No.
All right, it's going to be held
Meaning
at.
it's Saudi related, right?
Yes, I do. Very much so. Big market cap. Will be held at Trump Links at Ferry Point in the Bronx in October. It's a New York City-owned golf course managed by former President Donald Trump's family business. And it's expected to host a Saudi Arabia-backed tournament in October. A city official confirmed on Thursday. And Trump's golf course in Bedminster, New Jersey, did host a live golf event, which is the men's. This is the women's team series, so a little bit different, but still kind of part of Saudi Aramco's embrace of the golfing industry.
Well, and it's Saudi Arabia, right? Really looking to kind of redefine itself, have a role in professional golf, their new league, right? Their Live Golf, which has created, we've heard a lot of skepticism from the society at large and certainly out of Washington. But it is interesting to see that this is going forward.
It is, and it's on the men's side, it's really upended the industry. I mean, it'll take years for this to play out, but really interesting stuff, and President Trump's courses are right involved.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market sold off today, and you could argue this is exactly what the Fed wants to see, tighter financial conditions. The move came after Fed Chair Jay Powell bluntly said the Fed is likely to keep raising interest rates and then leaving them elevated for a while. He also pushed back against any notion that the Fed would pivot, moving to reverse course anytime soon. He's expecting the economy to slow as the Fed works to bring down prices, but for the equity market, the question is, how much closer are we to recession? Seems clear that that's a big worry right now for stocks. S&P 500 down today by 3.4%. NASDAQ comp tumbles nearly 4%. Dow Industrial Average was down about 3% today. Now, in terms of the economic news, the Fed's preferred measure of inflation, the PCE deflator, it was down in July by just 0.1% compared to June. Yes, energy was a big part of that story, but it's the first negative print we've seen since the beginning of the pandemic. And if you look at the University of Michigan data on inflation expectations, lower for the year ahead. We had the biotech firm Moderna suing rivals Pfizer and its partner BioNTech for patent infringement. Moderna is accusing these companies of violating intellectual property rights on key elements for Moderna's messenger RNA technology. Stronger dollar today with the Bloomberg Dollar Spot Index rising 0.5%. Little movement in the bond market on the long end. 10-year last quoted at a yield of 3.02%. We move up 1 basis point on the 2-year. Last quoted in New York at 3.37. I'm Doug Krisner. That's your Bloomberg Business Flash.
Really appreciate it. Thank you so much, Doug Krisner there. Well, this week, hospitality consultant and host of Bar Rescue, John Taffer, expanding his Taffer's Tavern footprint, opening up his first Washington, D.C. area location. It's next to Capital One Arena. It is the second full-service Taffer's Tavern franchise location for the brand. And so we wanted to talk to him a little bit about what he's doing and talk to him about the hospitality industry.
Yeah, absolutely. John Taffer, host and executive producer, Bar Rescue, joins us on the phone from Charlotte, North Carolina. John, talk to us about your new restaurant.
Oh, nice to talk with you, Paul. Carol, nice to be back.
Hey.
You know, it's been a long haul for us. This was a concept we created 4 years ago and started franchising. We did well. We've sold about 30 franchises around the country in various stages of development. But, you know, this concept was developed based upon lack of labor. And when we started the development of the concept, Paul, this was years ago. Trump was president. Unemployment was very low. We couldn't find employees in the restaurant industry. Just like today, we can't find employees in the restaurant industry. So this is an automated, computerized system. Kitchen has about 60% less labor than a traditional restaurant. Food quality is more consistent, actually, because we've taken the human element out of a lot of the cooking and preparation processes. But we're doing very well. Our prime costs are working. We're dealing with the food increases now, which are hitting us at about a 14 to 15% level on an average across the board.
Wow.
But I must say, we just staffed about 108 people in Washington, D.C., and about 90 people in Boston. Our Boston restaurant opens a week after the D.C. restaurant. And we anticipated a much greater problem in staffing the restaurant. We did fine. We hit our staffing numbers. We hit them pretty quickly. We're pleased with the quality of the staff that we've realized. And that was our biggest concern, Paul, was could we actually get the labor to staff the restaurant adequately? But we did. And we found, interestingly, that the labor market in D.C. was much more responsive and easier than the labor market in Boston was. We were staffing both and opening both cities at the same time. It was interesting to look at the comparative between the two.
Hey, John, how many people showed up for those spots?
Oh, probably 200 to 210 to hire about 120, Carol.
Okay. All right. So you had a little bit of room in terms of, I'm just curious. Well, you know, I did want to just take a step back as we talk about kind of this model that you continue to expand. I mean, how would you say the hospitality industry, the restaurant industry is doing, you know, versus where we were in the pandemic? I mean, are we back there yet or not close?
You know, it's such a regional question, Carol. When we look at certain markets, There are cities now or marketplaces that are running 25% behind pre-pandemic levels. And then there are markets that are running 30% ahead of pre-pandemic levels. And it goes back to the lockdowns, which states had longer lockdown periods, which states I think the crime rate is affecting restaurants in some cities, certainly. The restaurant sector is a leisure sector. And the leisure sector, of course, is impacted when disposable income is impacted, which we're seeing now, of course, with inflationary impact. So disposable income is down. I think safety concerns are an issue in some markets, but Carol, we're far from back. We're still stumbling along, and there's bumps in the road constantly for us with regard to labor, with regard to product, and with regard to environmental influences, if you will.
So, John, when you're dealing with, like a lot of businesses, you're dealing with inflation in your cost structure, to what extent are you passing that along to your customers here? I'm just wondering, the certain restaurants in certain different levels, how are they doing in terms of their rising costs?
It's a struggle, Paul. I mean, we can't charge $18 for 8 chicken wings, but our costs for those chicken wings are about $12.
Yeah.
So we're taking a hit in certain items. Hopefully you get a soft drink and you get a couple of other items to offset that loss. But Paul, there's no question we have menu items that we're taking a hit on, and taking a price point to the level of the cost impact that we have doesn't match the perceived value of a consumer in a restaurant environment. Remember, we run about a third food cost of revenue. Right. So if food cost goes up $1, based on our economics, we have to raise price $3. And that becomes very, very difficult. You can only push that elasticity so far.
Do you feel like those pressures continue, John, for a while longer? I mean, we've talked with you a bunch of times. We're just trying to figure out these inflationary pressures on a day when we heard from Jay Powell, head of the Federal Reserve, like how much longer we continue to see these inflationary pressures. If you had to guess, what would you say?
Well, I would say another year. And the reason why I say that, Carol, is my research shows that cattle herds have been reduced because of feed issues. There's other herds and crops that have been reduced in overall planting or quantity. We're going to feel that for the next few months. So I see some type of a stabilization in the next 4 to 6 months, but I don't see things normalizing for about a year.
Hey, John, I want to go back to the labor issue because I live in a town in New Jersey that has got a lot of great restaurants, and surrounding towns do as well. They're not national chain restaurants, they're locally owned, and they depend upon immigrant labor to an unbelievable degree. And I'm just guessing some of it's legal, some of it's illegal. How is that evolving here in the last couple of years versus the prior 4 years when it was really tough for the immigrants to get across, legal and illegal?
Well, it's interesting, Paul, when you don't have a staff and you have to get bodies in the kitchens and bodies to I think that there's a lot of restaurateurs are taking that leap into some illegal labor, and that's a concern. But my friends run the casinos in Las Vegas, Paul. They're all large casinos, and they're down about 15, 18% in staffing. And the solution isn't to solve it with staffing. The solution is to solve it with robotics, with computer systems. We can't look at each other and say that this labor problem is going to resolve itself next year. I don't see any forecast suggesting that.
Okay.
So the solutions have to be non-human resource solutions as much as we can. A typical Vegas hotel, Paul, has added about 800 policies and procedures to reflect the shifts in manpower.
Yeah, I feel like I increasingly see it when I'm checking into a hotel. It's like, here, do you want to check in yourself? And
well, do you want
turn down service?
Exactly, yeah.
It's definitely changing. Hey, John, so good to hear your voice and check in with you again. John Taff, our host and executive producer of Bar Rescue, opening that Taffer's Tavern in Washington, D.C., expanding the franchise in D.C., Boston, moving around, and other locations. Thank you so much, Paul.
Oh, this is great. You guys work hard, though. I'll tell you that.
It's time for a martini or something.
Exactly.
All right, guys. Paul Sweeney, thank you so much. From the whole Bloomberg Business Week team, have a good and safe weekend, and check out our weekend show and podcast. This is Bloomberg.